NVIDIA is down 10% since reporting strong third-quarter results, but CEO Jensen Huang warned of some near-term supply headwinds for Blackwell chips that could allow competitors like Broadcom to move in. My next guest also sees opportunities for rising players of a different kind in the AI space. So there's a paradigm shift from this brute force scaling to more efficiency and innovation. Joining me now is Chetan Puttagunta. He's general partner at legendary VC firm Benchmark. CNBC's Tech Check anchor Deirdre Bosa is with us as well. Chetan and Deirdre, it's great to have you both here. And Chetan, I would be really curious if it's getting more active in the VC world. You're starting to see kind of more smaller companies on the forefront of AI coming through the office. What's driving that? What kinds of things are they up to? And how might we expect them to affect kind of the AI world in the next 12 to 24 months' time?
Absolutely. Thank you for having me. As Benchmark, we're primarily focused on investing in seed and Series A companies. And in the last 6 to 8 weeks, we've seen a tremendous amount of innovation, especially at the model layer, and then for the last 2 years at the application layer, taking advantage of all the advances in the AI models. Specifically, what's happening at the model layer is as we move into a inference time or a test time compute paradigm, you're seeing a lot more advantage to entrepreneurs and technical founders that are able to push to the frontier with algorithmic innovation. So for the last 2 years, a lot of this investment has been with billions and billions of dollars of CapEx and essentially scaling to get advantage on AI. And now we're starting to see a lot more on the algorithmic side.
Deirdre, build on this, if you will. What else are you hearing in terms of the shift that might be underway?
So I think to break it down, there's been two kind of major phases in the generative AI race. What Chetan's talking about is that pre-training or training phase where the technological advancements were sort of exponential. Each large language model, whether that be from ChatGPT, Gemini, Claude from Anthropic, they were getting exponentially better each time. But now there's sort of maybe an acceptance that we've hit the scaling laws. There's not enough data to continue the pace of these advancements. So it brings us to a second phase, which is post-training or inference. And this is very different. You can do more on the existing models, which is what I think Chetan is referring to. You get more applications. We start to look for those killer apps next year where we're building on use cases on the technology that is already out there. So in that sense, you see the focus go from hardware, NVIDIA, GPUs, to software, and potentially, much smaller companies that are more investable for VCs versus mega caps with billions and millions of dollars on their balance sheet to invest in, a company that may be only 1 or 2 or 3 people building on top of the existing models and being able to do a lot more. Part of that, too, is, the rise of open source models like Meta's Llama. It enables entrepreneurs, new startup companies to sort of challenge the incumbents because they can get access to the frontier models in a very, specific vertical to compete and maybe even create a better product.
Chetan, can you give any examples of what you're seeing? And also, you mentioned that you're kind of a very early on stage investor, so it could be a while before these kind of companies hopefully come to market.
That's absolutely right. I think on the application layer, I'll give you a very specific example of a company named Sierra, where we were lucky to be involved in from the formation, led by former co-CEO of Salesforce, Bret Taylor. They started the company in early 2023, and what they're doing in terms of revolutionizing customer service for enterprises is simply remarkable. And so they're leveraging not only their own proprietary technology and models, but also open source models and also models from the latest model companies. And as a result, the applications that they're delivering are not just incrementally better than SaaS applications, it's a completely different experience. And what they're doing is not only consuming, software bits and making workflow more efficient, as was generally the trend in software for the last decade plus. What they're now doing is automating so much of the task itself that an enterprise could simply just say, we're going to outsource this entire function to this application, and the application not only makes the company better, but it also makes the underlying business much better. And the consumers that are dealing with that business now have a much better experience every day. So think of this Sierra AI agent, if you will, delivering the best customer service agent experience every time, replicated an infinite number of times. And that's an experience that was previously not possible without AI.
That's really interesting, especially as a customer experience skeptic myself. Chetan, I know we have to 15-second answer. I mean, he came from Salesforce. The street goes back and forth on whether SaaS is going to be totally disrupted by this or not. Is currently feeling kind of bullish on it, but it doesn't sound to me like you'd be very bullish on these existing software companies.
I think existing software companies have lock-in in the sense of like their data, but I think there's a ton of opportunity for these new startups like Sierra, like 11x, like LevelPath, and many others that are going after large incumbent markets with this AI-first approach. And they're being accepted and pulled by customers today, unlike we've ever seen in software over the last 2 decades.
And we know what that means for potential implications. Chetan, thanks for joining us. Really appreciate it today. Chetan Puttagunta.
Absolutely.
Deirdre, thank you as well, as always. Deirdre Bosa.